I had one of the most profitable week trading US30 index last week, where I banked a total of 1 to 17 risk to reward from these three buy positions. And I will be breaking these trades shortly. I know how the majority of folks tend to stay away from indices pairs such as the Nasdaq, US30, S&P 500, to mention but a few, owing to the fact that not only are they very volatile, but as most will say, they are highly unpredictable. If you stay till the end of this video, not only will you be able to learn the mystery behind trading these indices pairs profitably, but also you'll get to know how to better position yourself to take advantage of the trade opportunities US35 index will be presenting us this week. Without wasting any more time, let's get right into the breakdown. Now, firstly, I have to say all of my trading decisions always starts from the daily time frame and the weekly time frame. And then I work my way down to the lower time frames to be able to capitalize off of the higher time frame bias. Now, US30 index got my attention 2 weeks ago. Looking at the weekly time frame, I noticed we're coming to a weekly key level somewhere around the psychological number. Very sorry about that. My network is acting up. Somewhere around 34, 300 psychological number was a nice weekly key level that we came right into some 2 weeks ago. Now, if you look to the left of this very level right about here, what you would notice looking to the left is for every of the times we tested the level, we noticed we had a huge movement of price to the opposite direction. So as you can see right here, we tested the level from the upside, and then we had this huge buying movement. What come into the level somewhere around here, I'd also seen a huge buy movement from the level somewhere around here also, with the level acting as a support. And as you can see, while we were below the level, we had a huge bearish sell movement from the level. Then as you can see, when we tested the level again from the downside, we had also a nice sell movement from the level, and then here, and then of course here. And now you can see quite a number of times. You can 1, 2, 3, 4, 5, 6, 7, 8 number of times we have had to see price come and test the level and add a huge movement to the opposite direction. And then, of course, right about here, we had this nice break above the level. And now, if there's one thing that's peculiar about the markets, guys, it's repetition. Price will most likely do what it has done before. And then we had nicely come right into the level some 2 weeks ago. And then, like I said, this was what caught my attention on US30. Going to the fact that previously, looking to the left, like I established some seconds ago, for every of the times we tested the level, we had huge movements to the opposite direction. And now we came right into the level from 2 weeks ago. What then again would we expect? Huge movement to the opposite direction. In this case, we'd expect huge buying movement from the level. And then if you pay attention very closely, we had 2 weeks ago, the weekly candlestick closed as a nice rejection candlestick from the level. Now you can see what the extent, you can see the length of the weak rejection. And this tells you the extent to which we had the sellers moving price past the level, and then what we had buyers rejected sellers from moving price anyway beyond this level. And now, having closed 2 weeks ago as a weekly rejection candlestick from the level, I was kind of convinced that we were going to continue to see price heading all the way to the upside. Just in a bit to stack up the confluence as to why I felt the movements to the upside, having seen the last 2 weeks candlestick closing as a rejection, introducing my fib retracement tool from the weekly swing low to the weekly swing high right about here. And notice also, not only are we seeing a weekly rejection candlestick from psychological round number 34,300, also from a weekly key level, we're having a rejection from the weekly key level. And then in conflict with the fact that introducing the Fibonacci retracement also, we can see very nicely how this weak rejection was forming off the 61.8 Fibonacci golden reversal level. And now, like I said, having seen every one of these at play at the very level here, I was kind of certain for a fact we would begin to start seeing the buying pressure kick in by the open of markets last week. And then I was pretty much anticipating on the long run would see price come back to swing highs right about here. Afterwards, we would most likely test the negative 27. So in the coming weeks, I'm envisaging for price to come into these levels. The first level being the previous weekly swing highs right about here. And now having seen the weekly or rejection candlestick that closed 2 weeks ago was where I pretty much moved down to the lower time frames where I had my entry opportunities riding the movements to the upside. Now taking this down to the daily time frame, again from the weekly time frame, there's something I failed to establish was the fact that from the weekly time frame right there, you can see we are very clearly in a bullish market structure, as you can see, with price presenting us the swing high, and then with this level being the swing low. And then we had this nice retracement that came right into our key level, 34,200 psychological number, Fibonacci 61.8 level, after which we add the rejection candlestick from the level. So we have the weekly time frame in an uptrend, and then the daily time frame somewhere at this level right here. We add the daily time frame shifted from a bullish market structure to a bearish market structure. As you can see, this being the swing low that led to this swing high. And then we had this nice sell-off, shifting the market structure from the daily time frame perspective, from bullish to bearish. And then as you can see, we kept on printing more of lower highs and lower lows. And then at this level right here, we can conveniently say we have had the shift in market structure from the bearish markets to the bullish markets. Now, sometimes I understand this candlestick wicks and all of that makes it very complicated to better identify the shift in market structure. And one very easy way to do that is you quickly want to shift from your candlestick to your line charts. And as you can see right here, we have this being the swing low that led to this being the swing high that led to this swing low. So what that means is we have this as the lower low, as the lower high rather, that led to this lower low. And then we're having to see what? A nice break above the previous lower high right here, with this presenting us more like a higher high. So at this level, we had a nice structure shift from bearish to bullish market structure on the daily time frame perspective. And now we can take this back to the candlestick. The line chart was just meant to better identify the exact point at which the structure shift was confirmed. And now we have the weekly time frame in an uptrend. We have the daily time frame now shifting from a downtrend to an uptrend. As soon as I add this shift, this bullish move that shifted the market structure to the uptrend, was where I pretty much started identifying my areas of interest where I was potentially going to look to wait for price to come into and then get in the buy trades in line with the market structure. So I had this as my first daily structured level. As you can see, we had lots of weak rejections off of this level, making this a kind of a resistance. And then we had a resistance and having to see this close above the level, making this a previously broken resistance expected to act as a new support. So I had this level as my first level area of interest where I was potentially hoping for price to come right into, and then I would look out for my buy entries from that level. So that was my first area of interest for longs. And then I had also a level just beneath that level, somewhere right here, as my second level area of interest. So I was also going to look for buying opportunities at the retest of this level. And where this would have formed the perfect inverse head and shoulder pattern if only price had come all the way down here. And now, guys, the idea is to trade what you see and not what you think or what you know. So having seen this nice shift in structure from bearish to bullish from the daily time frame perspective, also aligning the daily time frame market structure with that of the weekly, I had marked up these levels as my areas of interest. Very quickly, if we take a look at the 4-hourly time frame, it gets even more interesting, as you can see. So we have the daily time frame, the weekly time frame in a bullish market structure, the daily time frame also in a bullish market structure, and then As you can see, from the 4-hourly time frame perspective, I needed the 4-hourly time frame market structure to also be in line of that of the weekly and then the daily market structure. And then, of course, if you bring in the line, charts, you would get to see that this was from the 4-hourly time frame perspective, you get to see that we have pretty much shifted the market structure from the from a bearish to a bullish, with this being the higher low, with this being the lower low, the lower high, sorry about that, and then the lower low, and then we're having to see now a higher low. This break above the previous lower high, printing us a higher high rather. So this was the previous lower high, and then we're having to clearly see the line charts here, giving us a higher high, breaking above the previous lower high, more or less shifting the market structure from bearish to bullish. So moving this back to the candlestick. So now we're having to see the weekly time frame in a bullish market structure, the daily time frame in a bullish market structure, and then of course the 4-hourly time frame in a bullish market structure. Guys, once you have the majority of these time frames in sync, like the weekly, the 4-hourly, and the daily time frames in a bullish market structure, there is no reason whatsoever why you want to look for selling opportunities, because now we have the majority of the time frames to the upside. Very evidently, the only trade opportunities at this point I needed to look out for were all just buying trade opportunities, because I pretty much have established the directional bias for US30 index right from the weekly time frame. And then, of course, at this level, we are shifted from bearish to a bullish market structure, with my targets for US30 right from the daily time frame here. So having broken above this daily structure level, shifting the structure from bearish to bullish, my next level of interest was this level right about here. So every of my buying opportunities from the lower time frames after the break of this daily structure level, I pretty much was envisaging for price to come right into this as my first level take profits. And then if we have a break of this level before we get to see price come back to the weekly swing highs as we had established previously. So now this is my take profit level. And then again from the 4-hourly time frame, so as we add the confirmed structure shift from bearish to bullish, having marked out my areas of interest from the daily time frame, with this being my first level area of interest and this my second level area of interest. Now, because I understood that the US30 and every other indices pairs are exotic pairs, I love to take my entry time frames from the 15 minutes time frame. So I always want to get my entries from the 15 minutes time frame. So I scaled all the way down to the 15 minutes time frame at the retest of my areas of interest. So this being my first area of interest, clearly now we haven't seen we are above the level. For every of the times we were beneath, we were below the level, you can see we had the level acting as a resistance. We have the level acting as a resistance. And then at this point, we have the level as a resistance. And now because we're above the level is expected to act as a support. And then, of course, also you can see we're having not just seeing price break above this structured for daily structured level, also the fact that we have a nice break above the 50 exponential moving average. And then what? In confluence with the fact that this is a previously broken resistance now expected to act as a support is also the fact that we are having to see price break above the 50 exponential moving average. And because now we are above the 50 exponential moving average, at the retest of the 50 exponential moving average, we would expect the exponential moving average to hold price, acting as a dynamic support. So we have our previously broken resistance now turned support, and also our 50 exponential moving average, in this case, acting as a dynamic support. And now this is where I quickly scale down to the 15 minutes time frame. As soon as I started seeing price coming to retest my first level area of interest, at the retest of my first level area of interest, so I moved down to the 15 minutes time frame to look for candlestick confirmations for longs. Now this is the 15 minutes time frame. And then this is our first level area of interest. Now this is where I pretty much was waiting for price to come right into the area of interests. And also, I was waiting for the New York session to kick in. So when once you have identified your area of interest, the next thing you want to do is scale down to the 15 minutes time frame. And then also you want to have the session in your favor, the New York session. So at 34,500 psychological hour number. So I was looking for price to come a little bit deeper into the level. And then also coupled with the fact that as at this time here, we're still at London session. And then just as New York session kicked in was when I had my entry confirmation for longs. So you can see we had a nice retest of our area of interest. We had a nice retest of our 4-hourly 50 exponential moving average. If I switched back to the 4-hourly time frame, you get to see that very clearly. And then we had a nice retest of the 34,500 psychological number. And then again, we had the perfect reversal chart pattern. If you can see very clearly, a nice inverse head and shoulder pattern. As soon as the New York session kicked in, now with this confirmation from the 15 minutes time frame, that been my first confirmation entry for longs. Stop loss just beneath the head. I had a tight stop loss on this, owing to the fact that just beneath, below this first area of interest, we have ourselves a second level area of interest. So if we had seen price broken below this level, I would have patiently wait for the retest of my second level area of interest, like we had established from the daily time frame, to go in for longs. So I had my entry for longs. And then because it was already the start of the New York session, we had the volumes pretty much quicked in. The volume pretty much kicked in very quickly and started seeing price moving in my anticipated direction. And then as soon as I add this nice impulse to the upside, confirming that the bull run has kicked in. I then was looking for areas where I could scale in for more buys. And then this level also, as you can see, right here where the level acts as a resistance. And then we're having to see now the break above the level. Yeah, I had my second entry for long as soon as we came right into this level. Now, guys, as soon as we add this swing high right here, I'd pretty much moved my first trade to break even. So I'd secured my risk on the first trade and then more like using the very same 1% from this first trade to get in on this next trade. So I was pretty much risking just 1% of my account at this second entry for buy. As you can see, when we were under the level acted as a resistance, and then having to see price break above the level at the retest of this level, expected to act as a support. So a structured level which has been broken, and then a retest of the broken structure. And now we have a nice entry signal for buy, a nice rejection candlestick. This wasn't enough for me. So I think I had to wait for the next candlestick to close as a bullish momentum candlestick. And then, yeah, this was where I had my confirmed entry for longs with my stop loss just below this. And then, like I said, I was still risking just 1% of my account on this because I'd moved my first initial trade from the stop loss right here to break even. With my take profit targets from the already identified daily area of interest right here. This was my anticipated take profit. And then my next. Then I scaled in a third entry position for buys. Moving down to the 4 hourly time frame once again. I'd quickly identify the next 4-hourly structure. Now from the 4-hourly time frame, you can see the nice rejection of the structure level, rejection of the 50 exponential moving average, where we had the first entry for longs. And then I had also this structured level from the 4-hourly time frame. You can see how previously the level was a support, and then we're beneath the level, expected to act as a resistance. And then we had a nice 4-hourly break above the level. My overall take profit at this level right about here. And then, as soon as I had the nice 4-hourly break above this level, was where I scaled down to, again, to the 15 minutes time frame at the retest of this level to get in on my third buy. Trade. Moving down to the 15 minutes time frame again. At this level, was where, and I was waiting for price to come back into my identified 4-hourly area of interest, being the 4-hourly structured level. Then I also was waiting for the right session, being the New York session. Now, take note, guys. We had price now come back to 4-hourly identified area of interest, 34,800 psychological round number present at the level. And then all I needed was for the right session to kick in. Even though we had this nice entry confirmation for long, the retest of our 4-hourly structured level, a retest of the exponential moving average, as you can see from the 15 minutes time frame. And then we have a nice bullish momentum candlestick close above the level, above the exponential moving average, also above 34,800 price level. So yeah, even when I add the nice entry confirmation for longs here, being the momentum candlestick close just above the level and then above the exponential moving average, I still add the session not yet in my favor. I think this was somewhere around 9 a.m. Then it was some hours just before the New York session kicked in. So I pretty much was waiting for the New York session to kick in. As you can see, we kept on retesting the level. And then we add my confirmation for longs. You can choose to see this as an inverse head and shoulder pattern. And then with this being the potential right shoulder. And then, of course, you can also choose to see this as a triple bottom. You would not be wrong. Then, of course, the most important thing here is the fact that we're testing a fairly structured level. And then, of course, you can see from the 15 minutes time frame how we kept on bouncing off of the 50 exponential moving average. 34,800 psychological round number, triple bottoms, inverse head and shoulder pattern, lots of confirmations for longs. And as soon as I add the bullish engulfing candlestick off of the potential right shoulder of the inverse head and shoulder pattern was when I decided to go in on my third buy entry. Even though I had entered just, I think, an hour before the New York session kicked in. So I entered pre-New York session. And then this is what happened next. What price rally to the upside very quickly, and then only to end as soon as the New York session kicked in, back to my entry, almost stopping me out on this. Now, guys, understand, I still had my two trades running with both positions already at break even. So I still was risking 1% up until the time I got in on this third buy trade right here. I still was risking 1%. So as you can see, we had price very close to my take profit. And then as soon as the New York session kicked in, we had this selling pressure coming back to my entry, very close to my take profit, almost stopping me out on this. But because I was already securing some decent profits on the last two positions, I was willing to take a 1% loss on this already. But safe to say, my stop loss placing on this was very decent. And then we had the buying pressure stepped back into the market. Okay, yeah. And then snatching our take profits on this. Now, moving ahead to what I think will happen, or best still, what I'm looking to get right in on this for the week. Sorry, my network is acting up, guys. Stopping the replay. Now, from the daily time frame, you can see how we came right into this level, and then we had this nice selling pressure kick right in back into the market. And for me, I would love to see price give a daily candlestick close above this level, and then at the retest of this level, I'll scale down to my entry time frame, the 15 minutes time frame, where I would be looking to go long on this, taking price back up to the weekly highs, like we had established from the weekly time frame. So preferably, I would love to see. I'm still very much anticipating for more buying pressure to kick right back into the market. I don't use the trend line tool very often, but just to shed more light on what I think or what I would love to see a price to do would be, while we still have this daily structure level being the very reason why price is still acting up right about here. It's safe to say we still have this downward trend line holding up price. So when once we have a nice bullish daily candlestick break of this above this level, guys, best believe we might most likely see US30 coming to the 35,800 price level, somewhere around the previous weekly highs. So firstly, I would have this level. At the daily break of this level, I would wait for the retest of the level and then scale down to the 15 minutes time frame to get in on longs. And then, of course, if price does not do that, taking out this just to be able to see clearly. If price doesn't do that, what I would expect next for price is to come and then retest this level. So I'd love for price to have a more steeper retracement and then to continue the longs. So I'll be waiting. For price to come into this level. Take note, when we had this nice bull run, we really haven't had that nice pullback to continue the impulse move back to the upside. So if I take my feed from previous swing to the most recent, from previous swing low to the most recent swing high, yeah, you would see how this level aligns with the 50 Fibonacci level. So I would patiently wait for price to have a more steeper pullback, retesting this daily structure level, retesting the daily 50 exponential moving average. And then I'll scale down to the lower time frames with hopes to get entry confirmations for longs right here. Or preferably, I would wait for price to have a nice bullish movement from this very level and then break above this current daily structure level. And then at the retest of the level, I would look to get in on longs. Guys, if you want to take advantage of this opportunity that US30 will be presenting us in the next couple of days, do well to join my free Telegram channel. I will leave a link somewhere below this video in the description. Trust me, you really don't want to miss out on this. Thanks for staying to the very end. See you in the next video, guys.